What's up guys, Duracell Dave here from the community Art of Aping, where we show you the tools, tips, tricks, and trading signals in order for you to reach your own form of financial freedom. Today I'm going to talk to you about something that is extremely important on your journey in trading, which is really understanding your propensity, your efficiency, and your success rates around specific strategies, because there's so much information out there, and every single day as a new trader comes in and starts to divulge or show their kind of secrets, their strategies, their style of trading, you need to then figure out whether or not it complements the way in which you trade, the timeline that you have towards your goals, and also overall be able to kind of temperature check whether or not that style can sit well with you, because time kills all deals, and specific trading styles and strategies might make some people uneasy and other people confident. And so the best way to actually do that is to understand how to effectively backtest specific strategies in order for you to then gain confidence in the numbers and the data by you being able to understand whether or not you can execute it well. So one of the things that I really love to do is I like to set time aside every single day after I learn something to then digest it and then go back and backtest it myself. It's the best thing that you can do, and I'm not sure which trader I originally learned this from. I think it might have been Emperor BTC, but he basically said that until you've backtested something 100 times, you shouldn't start live trading that. And I took that to heart. I started to realize, well, you know what? The success in my day should no longer be identified or measured by how much money I would win that day, but what new tool I can add to my toolkit that I would then the following week or the following month feel confident in being able to execute with live capital, right? And so I think for a lot of people, when they start backtesting, they have a lot of trouble understanding where to actually start. So I want to show you the different styles of backtesting that I've used, and feel free to ask for this specific Excel doc. I can share it with you guys afterwards if you just ping us, or I can show you also a more simpler way if you don't want to get into the nitty-gritty or be as OCD as I might be around backtesting, right? So we're going to be using just a couple different tools here that you can have for free. One, obviously you can go to Google Drive, create a free account, and then just open up one of their Google Sheets. And then the second thing would be TradingView, and how we can utilize TradingView in order for us to understand whether or not we're good at this specific strategy, right? So the first thing that I want you to understand, this might be a little overwhelming for you at this point in time, and that's okay. But what we're gonna put on the screen for you are just the different steps that you need to complete, the checklist, so to speak, in order for you to feel confident on backtesting whatever strategy it is that you'd like to do. So number one is I always like to identify where it is that I learned the specific strategy from. You'll see this in green up top. YouTube, I learned the Fu plus divergences from this specific link. So I have something to always go back and refer to and dissect, right? The next thing that you need to do with any backtesting is you need to treat this like an experiment. You need to make sure that you have constants and that you already from the very beginning understand what metrics, what piece of data you're trying to pull out from a chart, from a setup, from a strategy, right? So I always like to create kind of like my hypothesis and then the parameters. And so you'll see under backtesting parameters, we don't have to get into the nitty gritty, but I literally just said the video identifies needing to look for anchor and trigger waves that then tell you with a green or red dot to long short the next candle. The test below was done by first identifying an anchor wave that sat above or below the 60 mark on Fu Manchu's indicator on TradingView. And then from there I look for a trigger wave with a buy or sell signal that had the MFI moving in the appropriate direction. The MFI is shown on the graph as the red-green wave trend. When looking for a short, what I want to see is the red wave trend starting to decrease. When looking for a long, what I want to see is the green trend decrease and get closer to zero. So as you can see, I'm starting to set up those parameters, because a lot of problems with backtesting is we're not true to ourselves. There's a quote that I heard from a statistician that I hired to analyze all the data that I had, but he basically said that in statistics, if you torture the data enough, it'll end up telling you what you want to hear. That's not what we want here. We want to be injected with truth serum and really understand whether or not this strategy in live conditions is going to give us the results that we actually want. After identifying, number one, where it is that you found this strategy from, number two, now creating the hypothesis, the backtesting parameters, then you want to go down a checklist and start creating the variables. So for myself, back in the Luna days, I wanted to identify what the coin was, what the anchor wave date was right? When the actual trigger initially happened. The time, the trigger wave date, the time, the interval, the chart that I was actually looking at, what direction, long, short. And then as always, my entries, my targets, my stop losses, and whether or not that strategy actually hit my final take profit, which I said here. Is this a strategy that can give me kind of a 2-to-1 ratio? Great. And is this a strategy that can give me a 3-to-1 ratio? Fantastic, right? And so I would then go through to TradingView right now. And let's say that we're looking at Bitcoin on the 15-minute. And maybe the strategy that we want to run right now, and I'm just going to make it up, is testing entries off of an EMA 8 and EMA 34, the blue and the yellow line, crossover. So what I do is I go to the time variable that I'm looking at, 15 minutes, the chart, and then here inside of TradingView, they have something called replay. And so on replay, you can basically go back as far as you'd like, and you can get rid of all of the data past that point, and you can start to drip out these candles so that you're not already subconsciously putting yourself in a better position. You're acting as if you're seeing this candle for the first time. And there's multiple ways that you can do it. You can hit to real time, we don't want to do. You can hit play, in which it starts printing a candle at a time. But what I actually like to do is just hit this move forward button that lets me on my own time per click see the next candle, the next candle, the next candle, right? Another thing that's very useful here is you want to make sure that when you're backtesting, you understand what type of market we're currently in. Is it ranging? Is it a bearish market? Is it a bullish market? And if you take that into account before you start doing the backtest, you'll also be able to understand what market conditions are best suited for this specific strategy that you're going to use. Very simple. You can also then, if we really want to go back in time, I want to log 100 backtests, which might take you a couple days. It's all right. What you can do is in the bottom left-hand corner of TradingView, where you see 1 day, 5 day, etc., this little icon right here with the calendar and the arrow, if you click on it, it allows you to jump to a specific range on whatever pair it is that you're viewing. So for myself, maybe I want to really backtest this back to June because of Bitcoin's June low, but we'll start at the very beginning. We'll hit go to, and then if we double click on the right-hand side, it will take us exactly where I don't want to be. Let me hit June 1st again. Here we go. We're here, June 1. So now that I'm already here at June 1, I can hit the replay button again, click this button that says jump to, and start right here. Phenomenal. So I would make a note inside of my Excel spreadsheet, starting on June 1 and at this point I would wait for an actual trigger. This is obviously a different back test here, but I just wanted you to be able to see the way in which you can aggregate this data for yourself through sheets. Now we start dripping it out. So what we're looking for is, in this specific test as an example, whether or not a good strategy could be every time that price crosses the EMA 8 and EMA 34, you enter into a position, is it a winning trade? And you might want to get more specific, like, does it not only cross the EMA, but then it has to back test it? So let's wait for a real nice, there we go. This is a cross, you can see in real time on the 15-minute. It blew through here at 5:30. So I'd go to my sheet, I type in the time is at 5:30. I'm not ready to enter yet. I want it to come back and test the EMA, which is done right here. And then maybe my parameters are enter on the next candle close and put a stop loss behind the low of the original cross. So let's see. I'm gonna enter here, and I'm gonna put the stop loss right behind this wick where the first crossover happened. And let's say I'm trying to see if this trade will always give me a 2R. All right, let's see what happens. Looks like I got stopped out, right? I would implement and put this data in, even though it was a loss. I would then go, I'd open this up, I'd hit setting, and I would actually write down what my entry price was, what my profit level was, what my stop level was. And going back here, you can see, was it a win? I would have written no. Now the reason why I like to put in entries, targets, and SLs is eventually it'll help me understand how wide my stop losses are, so I understand how much capital I can allocate to that trade. You get the gist of it. So again, from top to bottom, where you found the actual information from, what it is you're testing, the parameters. I wanted to cross the EMA 8 and EMA 34, and upon retouching one of those EMAs, I enter and then place the stop loss behind the low or the high of the candle that broke the EMA. Those are the parameters. And then now you start to log it. At the very end of this, I did 100 of these Luna Fibonacci backtests, or Vumanchu, excuse me. You're now able to create your own analysis, right? So I have such confidence on Bitcoin, on being able to trade the Vumanchu plus B divergences, understanding that across these 78 tests, I had a 78% win rate. And I know, based on which time frames, when I have that actual trigger now, without having to second guess it, 83%, 87%, 76%, I'm entering into that trade. I hope that helps. The last thing that I can say is, if everything that I just showed you on Excel is a little too daunting, the way in which I actually set this up, or this up, or this up, there's a bunch of different ways that you can aggregate data, right? I did this almost like a Scantron. If that becomes a little too daunting for you and you just simply want to know whether or not the trade actually works, I just highly recommend you use a trading journal. I use Trade Tracker for actually how I track my own specific trades, my live trades, but you can go to the portfolio section and create one that's primarily just for backtesting, which I did here with Crown Cross. Eric Crown created something called the Crown Cross. I wanted to test it. It's predominantly for short. I came in here, I started to log them on the specific days. Look, my total return was 15.83%. This was across about a 3-month backtesting that I did on TradingView, but I did it the exact same way that I just showed you. Quick and easy, guys. I hope that helps you. Again, what gets measured gets managed. This is one of the many things we teach in Art of Aping, and we hope to see you there. Take care.